Welcome back to Investing Talk Podcast. Today we're tackling a question that, well, it's probably in a lot of investors' minds. Is Commscope a good time to buy right now? We're going to break down some detailed analysis to really help you understand the landscape for this particular stock. Before we jump in, though, just a quick note. If you find these discussions valuable, please take a second to subscribe, maybe like this episode, leave a comment. Your engagement honestly makes a huge difference for us. And if you'd like to support the show a bit more, you could consider buying us a coffee. Also, thinking ahead, if there's a specific company you'd like us to look into, definitely leave a suggestion in the comments after we've wrapped up today.
Absolutely. And our goal today really is to sift through all this data on Commscope and give you the clearest picture we can. We want to highlight those key insights, maybe spark a few aha moments, help you feel properly informed without drowning you in jargon.
Okay, sounds good. So let's unpack this then, because the analysis on Commscope, it really does paint a perplexing picture. It's quite mixed, definitely not a simple buy or sell. It feels more complicated than that.
Yeah, it's genuinely fascinating, actually. You see the company showing clear signs of fundamental improvement, like they're getting their operations sorted out. But at the same time, there are these pretty significant worries about its valuation and, external market pressures. So it makes it a stock that's probably best suited for very specific types of people.
Okay, like who?
Well, either, say, very cautious long-term investors who are looking for that deep value turnaround kind of story, or, on the flip side, maybe more aggressive short-term traders who are comfortable with, frankly, pretty high risk and volatility. It's certainly not one for the average portfolio where you just set it and forget it.
Right, so not a general recommendation straight off the bat. And this is a company, just to remind everyone, operating right in the heart of communications infrastructure. We're talking fiber optics, networking gear, foundational stuff.
Exactly, but it's clearly grappling with both internal challenges and those external forces.
Which really underlines why we need to dig into the details here, understand these mixed signals.
Okay.
Okay, let's start with the basics then. The operational heartbeat. How is Commscope actually doing as a business? Our sources are highlighting some weakness on the top line, meaning revenue. It looks like it decreased.
Yeah, it did by about 7.87% year over year. It came in at $4.21 billion for 2024, down from just over $5 billion on a trailing 12-month basis.
Okay. That does sound a bit concerning, especially for a company in a sector you'd think would be benefiting from things like 5G rollouts and broadband expansion.
It certainly indicates some challenges, maybe a tougher market or more competition, but, and this is where it gets really interesting, maybe a bit counterintuitive, profitability has sharply improved.
Really? How so?
Well, in the first quarter of 2025, their net income actually swung positive, like really positive, $289.7 million, which is a huge turnaround from a loss of about $243 million just the year before.
Wow. Okay. That is significant.
Yeah. And there's more. The non-GAAP adjusted EBITDA, which gives you a cleaner look at core performance before things like interest and taxes. That more than doubled to $245.2 million. And they hit a 22% margin, which is pretty impressive.
So even with revenue dipping, they're getting much more efficient, making more profit from less sales.
Exactly. It strongly suggests they're making real operational improvements. Maybe better cost management, focusing on efficiency, doing more with less, essentially.
That's a key distinction, isn't it?
Yeah.
So the pie might be shrinking slightly, but they're taking a bigger, more profitable slice. But the question is, how sustainable is that? Especially in an industry that should have tailwinds like 5G and fiber.
That's the multi-billion-dollar question, right? Is this just cost-cutting, or is it a sign they're genuinely becoming a stronger, leaner company positioned for the future?
And what about things like debt? Does better profit help there?
Well, the specifics on debt and cash flow weren't detailed in our sources, but yeah, improving earnings and EBITDA definitely gives them more financial flexibility. It suggests they're focusing on internal strength, streamlining things now so they can hopefully capitalize better when or if that revenue picture turns around.
Okay, interesting. So operational improvements are clear, but the revenue question mark remains.
Yeah.
Now, let's pivot. How is the market looking at this company? The valuation. The current PE ratio, price to earnings, it's super low, 4.07.
Incredibly low.
And the forward PE is 13.76. Usually a PE that low, like 4, it screams bargain, doesn't it?
It does. Or it screams that the market has some really serious concerns about the company's future, despite those current earnings.
Right. So which is it? Undervalued gem or value trap?
Well, that's the crux of it.
Yeah.
And if you connect that low PE to what the analysts are saying, it gets even more interesting. The consensus rating from analysts is just a hold. not exactly a strong buy signal.
A hold. Okay,
Yeah.
that's pretty lukewarm.
And get this, the average price target from those analysts is $4.88.
Wait, $4.88? But the stock's been trading closer to $13 recently, right?
Exactly. That implies a potential downside of, what, 64%? It's a massive gap.
Oh, okay, that is a huge disconnect. So the stock looks cheap based on current earnings, that low PE. But the analysts are basically saying they expect it to fall significantly.
Pretty much. It suggests the market, or at least the analyst community, is pricing in some very serious execution risks or maybe persistent headwinds in their sector.
Even with those operational improvements we just talked about.
Apparently so. It's like they're saying, yeah, the cost cutting is great, profits look better now, but we're not convinced about the revenue or the long-term picture.
So the market's looking ahead and seeing potential problems.
It seems that way. They're looking for more sustained proof, perhaps. Proof that the revenue decline can be stopped and reversed, and that the competition won't just eat away at margins again. It's a show-me story right now.
Okay, that context is crucial. Now, what about the stock's actual price movement, the technicals? You mentioned volatility, and the analysis seems to back that up. Sounds like a wild ride.
Oh, absolutely. Extremely high volatility. The beta is 2.39.
Meaning it moves more than twice as much as the overall market.
Correct. And the volatility percentage itself is listed at 53%. Plus, look at the 52-week range. A low of $1.93 and a high of $14.68.
Wow, that's an enormous range, from under $2 to almost 15.
Exactly. And it's currently trading nearer that higher end. So anyone holding it has definitely seen some major swings.
So that volatility is a huge factor for anyone thinking about investing here.
Critical. It means big potential gains, but also big potential losses very quickly. Now, on the positive side, technically speaking, the recent price action is above key moving averages, the 5-day, 20-day, 60-day, even the 200-day.
Which usually suggests a bullish trend, right? Short to medium term.
Typically, yes. And other indicators like the Mass CD and the Awesome Oscillator are also positive, hinting at some upward momentum recently.
Okay, so some bullish technical signals. But is it clear-cut?
Well, here's another mixed signal. While those look good, things like the RSI, the Relative Strength Index, and the momentum indicator itself, they're a bit more mixed. Momentum is actually slightly negative, according to the analysis.
So the trend looks generally up based on moving averages, but maybe the recent buying pressure is fading a bit or losing steam.
That's a good way to put it. It suggests that while the stock has moved up, the conviction or the speed of that upward move might be slowing down. For a technical trader, that's a yellow flag. It might suggest consolidation or even a potential pullback is more likely. It's not all systems go on the technical front.
Okay, got it. More complexity. Now, shifting gears slightly, what about recent news? Anything significant driving sentiment? You mentioned earnings earlier. They beat estimates, right?
They did, quite significantly, actually. EPS came in at 44 cents versus an estimate of just 24 cents. They beat on revenue estimates, too, in recent quarters.
It's usually pretty good news for a stock, beating expectations like that.
Absolutely. You'd often expect that to spark more positive sentiment, maybe some analyst upgrades.
But I sense a but coming.
Yeah, but despite those positive surprises, there haven't been any notable analyst upgrades. That cautious hold consensus is still there, and those really low price targets haven't really budged.
So even beating earnings estimates wasn't enough to convince the analysts to change their tune.
Apparently not. It reinforces that prove-it mentality. They're likely waiting for more sustained positive trends, especially on the revenue side, or a clearer path forward before they get more optimistic. 1 or 2 good quarters driven by efficiency might not be enough for them yet.
Right. So looking ahead then, what are the big things that could really move the needle for Commscope? What should people be watching?
Well, the most immediate thing is their next earnings report. It's due August 4th, 2025. That's going to be a big catalyst for volatility for sure.
Everyone will be watching the numbers and the outlook, I guess.
Exactly. Management commentary, guidance, how they're addressing that revenue issue, that'll be key. Medium-term opportunities could come from innovation. Things like improvements in DOCSIS 3.1 networks, that's key for faster-pable broadband or other new product developments.
Things that could give them an edge.
Potentially. And then, of course, there are the broader macro factors. Telecom capital spending cycles are the big telcos spending money, the pace of 5G deployment globally. And supply chain stability is always a factor for hardware companies.
Okay, lots to watch there. So let's try and summarize the downsides. Given everything we've covered, what are the biggest risks an investor faces here?
There are several key ones. First, the sector itself is tough. high competition, risk of products becoming commodities, which pushes prices down. And they depend heavily on a few large telecom customers. If one of those big guys cuts spending, it hits Commscope hard.
Okay, sector risks. What else?
That high volatility we discussed, a beta over 2, that huge 52-week range,
Okay.
it's just a risky stock in terms of price swings, not for the faint of heart. And finally, that huge gap between the current price and where analysts think it should be. That signals substantial potential downside, and it reflects the company's history of significant price pullbacks. It tells you the skepticism isn't new.
Right. So weighing all that, the good, profitability, efficiency, the bad, revenue valuation concerns, and the volatile.
Yeah.
What's the overall rating or assessment from the analysis?
The analysis landed on a rating of 5 out of 10, basically smack in the middle.
A 5 out of 10. Perfectly reflects the mixed picture, I suppose.
Exactly. It acknowledges the clear operational improvements and that tempting low valuation, but it also heavily weights the concerns about revenue, the sector headwinds, and that significant volatility. So for more conservative investors, the advice is pretty much wait and see. Hold off until there's more clarity.
Wait for maybe revenue to stabilize or analyst sentiment to improve.
Precisely. Wait for more confirmation that the turnaround is truly taking hold and is sustainable.
But what about those who might still be interested, despite the risks? The cautious long-term folks or the aggressive traders you mentioned earlier? Is there a suggested entry point?
The analysis did suggest a potential entry range, aiming for a better risk-reward balance. It suggested looking at the $7 to $9 range.
Okay, so significantly lower than the recent highs near $13.
Right. The idea is to build in a buffer, acknowledging that risk of a pullback given the volatility and the analyst caution. Entering lower down provides a bit more margin of safety.
Makes sense. And just to reiterate, who is this stock really for?
Yeah, it's definitely not for everyone. It seems best suited for 2 specific types. One, those cautious, patient, long-term investors looking for deep value, believing in the turnaround story over time. They need strong conviction and patience. 2, aggressive short-term traders who are comfortable navigating that high volatility and playing specific events, like earnings.
And for those traders, risk management is key, right?
Absolutely critical. The guidance suggested using a fairly tight stop loss, maybe 8% to 10% below entry because of the volatility, and setting take-profit targets perhaps near those recent highs, around $14, if the momentum picks up again. It requires discipline.
Okay, so Commscope. A really complex picture, isn't it? You got these impressive operational gains, better profits, but then you layer on falling revenue, intense competition, massive volatility, and very skeptical analysts. A true mixed bag.
It really is, and it highlights such an important point for anyone investing, doesn't it? You can't just look at one number, like a low PE, in isolation. You have to understand the context, why the numbers are what they are, and how different people are interpreting them. Improving profits are great, but if the market doesn't believe it's sustainable or that revenue will follow, the stock might not react the way you expect.
Absolutely spot on. Which brings us to maybe a final thought for you, the listener, to chew on. Beyond all the data points in the analysis we've laid out today, with all these conflicting signals, how much does your own personal feeling about risk, how much volatility can you stomach, and maybe your own conviction about the long-term future of communications infrastructure?
Yeah.
How much does that influence how you look at a stock like Commscope?
Yeah, that personal overlay, your own tolerance and belief system can be just as important as the numbers sometimes, especially with a story this complex.
Indeed. Well, thank you for joining us for this look at Commscope. We hope it's given you a clearer picture of this situation and what factors to keep an eye on. Until next time, keep learning and investing wisely.